Nigeria, the market certainly made an attempt to maintain its positive open, spurred on by a bullish note from RenCap on the second-tier leaders Access and Skybank, but the selling was overbearing and the market pushed down, closing 1.5% lower by the close of trade. Traders saying that it seems as though an overhang of selling pressure still exists on the NSE. Overall, volumes continue to dwindle. We saw only $17.8 million trading. Investors predominantly chose to maintain the wait-and-see approach as we saw 61 stocks unchanged, 56 declining and 22 advance. The highest value trades, though, were in Nigerian breweries, which remained unchanged at 62 naira, in First Bank, which dropped 4.7% to 13 naira 15, WAPCO, which lost 4.4%, and in PZ Cousins as well, which saw a 0.3% shaved off its share price. So that, broadly speaking, the market activity yesterday. To get the latest on what's moving the market now, let's cross over to Lagos to chat to Olukayode Akindele. He's Managing Director at Greengate Strategic Partners. Thanks so much, Kayode, for joining us this morning. Well, it seems selling pressure still being exerted on the local bourse on low volumes, with many investors still seeming to take a wait-and-see approach. Your view on the markets? Because, quite frankly, it seems that all we're waiting for is the next big trigger.
Yes, I think it's a combination of factors. I think what we're seeing is that the volume of the Lagos market is really in three main areas: the stockbrokers, the pension funds, and foreign investors. And what you're seeing is that there is no real confidence in medium to long term in the market at the moment, because people are still waiting to see what the regulators are going to do about a new DG for the stock exchange, talking about sorting out the stockbroker problem we have in Nigeria and issues. So that's what's keeping away probably foreign investors. And then in terms of volume, the new margin trading rules will reduce the volumes the stockbrokers can put in the market, because banks have been stricter in the margin trading accounts they give to stockbrokers. So I think the effects of various different influences on the market, which are dampening the market at the moment.
Well, if we look at that news that's come out regarding the SEC specifically, we've seen the new head of Nigeria's stock market regulator encountering subtle and aggressive resistance to efforts to actually root out brokers whose alleged abuses over the past year contributed to the $50 billion crash that brought the financial sector close to collapse. Do you see her managing to ignite any bit of turnaround here and fight that resistance as aggressively as we've seen the Central Bank of Nigeria do?
I don't think she has a choice, to be honest. I think she has to be aggressive about it. Aggressive methods are required to bring back sanity to the market. At the moment, when she first came in, there was a consensus. She was trying to go to the consensus period, trying to understand the market fully, because she's been out of the market for about 15 years, trying to understand the market. But I think now she has to be quite aggressive about it, because the performance of the market since January has given some kind of false hope that things are getting better. But the underlying pressures on the market in terms of the issues that led to the collapse of the market are still there, and they need to be sorted out for a long-term, sustained long-term growth in the market. Well,
while various reforms are underway, we've certainly got companies still making news. Starcoms yesterday out with numbers, those being Q1 figures. EBITDA falling back 32%, revenue declining close on 7% as well. The company saying hit by a 32% decline in average revenue per user levels for the first quarter. Market reaction to those numbers?
Numbers were a bit disappointing. Starcoms have been going through a period of initially the results they provided in 2009 were blamed on mainly on foreign currency fluctuations, which because a lot of their loans were in foreign currency, and with the depreciation of the naira in the end of 2008, beginning of 2009, that affected those repayments. But they still seem to have increased subscriber numbers, and revenue was increasing as well. But the Q1 results seem to show there seems to be a backlog now, and it would be interesting to see subscriber numbers, whether this fall in revenue is because of a decreased subscriber numbers, or the subscribers they have now are just spending less.
Well, from the looks of it, it seems like they're spending less. And while that goes underway, the business itself seems to be spending more. I mean, we saw operating costs rising 12.4%, while the net interest expenses more than doubled during the period because after the firm converted, as you said, that $60 million loan to naira. Just how much is a concern? Or how much of a concern is management of costs for you right now?
it's a serious concern. I mean, Starcoms is in a position where it is in fierce competition with its other big competitor in the CDMA market, which really is Multilinks, which is owned by Telecom SA. And both of them are in a real bidding war to take over the CDMA market. And so that's why costs are increasing. I think one silver lining in the cloud for the likes of Starcoms, as well as some of the other telecom operators in terms of operating costs, is the imminent arrival of the main one cable, which should decrease especially internet costs for operators, and whether they'll be able to pass that on to the consumers, but it should decrease the operating costs.
Well,
I mean,
continue, sorry.
Sorry, we're expecting main one to come online June, July this year, and then the Glow 1 line as well is expected to come online as well. So that should be helpful to the telecom operators.
This in a context, though, where we're not only looking at competition from Multilinks. I mean, we've just recently heard in the news that India's Bharti Airtel has completed its $9 billion acquisition of African operations from Kuwait's Zain in a deal that would now make the Indian company the world's number 5 wireless carrier by subscribers. So what's your outlook in terms of competition then moving forward?
Bhartel's acquisition of Zain is very interesting. I think one of the jewels in the crown in the Zain's network is the Nigerian market. But there are issues in the Nigerian market. I mean, some of the directors and shareholders have taken Zain Nigeria to court in respect of some transactions that occurred during the management of Zain. We have Econet in Zimbabwe taking Zain to court as well, saying they have preemption rights, so there was no right. They had no right to sell Zain Nigeria to Bhartel. So you have those kind of issues which will probably cause a stumbling block to the acquisition and the rollout of Bhartel's new management plan for Zain until those are sorted out. But I think competition in the sector has increased. I mean, we've seen latest figures showing that subscriber base has grown to about 78 million, which is quite significant. Yeah. Now, what the issue is now is to try and keep the ARPU numbers up for most of those for most of the subscribers, and that's the main issue. And spiraling costs are not helping. But I think if they can reduce, especially internet costs in Nigeria, which are very, very high, I think that will encourage users to spend more time on the internet and increase costs, especially in that area, which will compensate for if call costs go down.